Good morning. The company that promised to save humanity is now asking whether it can actually afford to keep going. OpenAI just missed its own revenue and growth targets by a wide margin, and the fallout is rippling through Wall Street. Welcome, let me show you the numbers they don't want you to see. Let us start with the core problem. OpenAI missed its internal revenue and user growth targets across the board. The Wall Street Journal reports that the company's own estimates were significantly higher than what actually materialized. This is not a minor miss. The gap between projected and actual performance has raised serious eyebrows across Silicon Valley. Now let us look at the spending. OpenAI has already committed to approximately $300 billion in multi-year computing deals with Oracle alone. NVIDIA pledged billions more, and Amazon expanded its spending agreement by $100 billion. Microsoft, their longest backer, has invested over $13 billion since 2019. The total spend is staggering. Here is the fascinating structure. Three major hyperscalers are each footing massive bills. Oracle signed a $30 billion 5-year deal. NVIDIA committed billions to help the startup build its own compute infrastructure. Amazon restructured their relationship into a strategic partnership with a $100 billion expansion. The trio of companies is essentially building OpenAI's entire financial backbone. But here's the twist nobody is talking about. The finance chief herself, Sarah Frier, has publicly expressed deep concern about whether the company can actually fund its future compute agreements if this revenue slowdown persists. In a rare, candid moment, leadership told CNBC they are buying as much compute as possible. That phrasing suggests they know they have a problem but plan to keep spending anyway. The market reacted instantly. Shares of Oracle and major chip makers slumped on the news. The broader market panic raised questions about whether the entire AI infrastructure bubble might be built on shaky revenue foundations. If OpenAI cannot deliver the growth investors are pricing in, those hundreds of billions in infrastructure deals suddenly look like a very different kind of bet. So where does this leave us? OpenAI is racing toward a highly anticipated public offering later this year, but the revenue reality is not matching the hype. Microsoft just dropped its exclusive intellectual property license. The spending is still accelerating even as growth stalls. The question now is not whether OpenAI can build the future of AI. The question is whether anyone can afford to pay for it. The answer to that question will define the next chapter of artificial intelligence itself.